Stocks are down, and what are we doing?
Let's go shopping.
Welcome to Stock Stories. Hello, my name is Alex Mason, your stock storyteller, and today I'm joined by my beautiful wife.
Selenia.
And today we are going to talk about what do you do when stocks are falling? How do you decide what to invest in? And how do you think about that process? And this show, if you're new here, is to help you as an investor make better decisions. We're studying the business behind the stock, and we're studying all of the S&P 500 companies as well as mental models and more topical episodes like this one where we get into the nitty-gritty of different things happening in the market and how we can grow as investors. So yeah, welcome to the show.
Hello.
Okay, so what has been going on in the market lately,
Is
honey?
the stock market still in correction?
Is the stock market still in correction? Actually, no. So we're recording this at the end of March 2022, and the stock market has done some amazing things. It's actually come back a lot from the bottoms that we hit in February. And so the deals out there are not as strong as they were for many stocks, but there are still some deals to be had in the market. And yeah, correction territory wise, we're out of it. We're only about 5% below the highs that we saw early in the year if we're looking at the S&P 500. So yeah, so we're down for the year still, but we have come back from some of the lows in the recent market volatility.
Yes, but with that being said, there are still some great opportunities. And this episode, we're going to chit chat a little bit more about how we strategized during that massive correction, what we bought and what we didn't buy.
All right. So last time we talked together, you and I were discussing some market volatility. Stocks were down a lot, and now they're back up a decent amount. They've more or less recovered half of their losses from early in the year. So, how do we think about this as investors at the time?
Yeah, what did we buy? What did we end up buying
Yeah.
and why?
So, if you remember from the episode a few weeks back, my wife and I discussed that we were looking at a couple individual stocks in particular. One of them is Meta Platforms or Facebook, and the other one was Etsy, right, honey?
Yes, so they both seem to have dropped significantly and were looking pretty attractive. But we did some more digging and actually ended up pulling the trigger only on one of them.
Exactly. And the one that we picked ended up being Etsy. And we can talk about why that was. Let's recap. Why did we look at those two companies in the first place?
Fundamentals.
Fundamentals, right? There's a lot of stocks out there. There's a lot of very fast growing stocks, definitely stocks that are growing way faster than those two companies. There's also a lot of unprofitable companies out there too that are a little more speculative. So the way that we think about investing, at least with the individual stock portion of our portfolio, we want companies that are profitable and highly profitable and have a long runway of growth ahead of it, right?
Yes, absolutely. We just want to buy a great company that is trading at a great price for us. And I think Etsy's PE ratio, do you remember what it was when we ended up buying it?
It was around 30 or 32 times earnings.
For a growth company, guys, that's pretty good.
Exactly. And we can dig into that a little bit because the expected growth of Etsy is in the 20 to 30% range as far as its profits over the next few years. And historically, they've actually been achieving that. So this is a company that isn't just promising future growth when they haven't really done much already.
Mm-hmm.
They've actually been hitting it out of the park as far as their profits.
Yes. When we're talking about value investing here, our goal is to hang on to the company for a long, long time. If you were to go ahead and pull up Etsy's ticker symbol, you would easily see that it's a pretty volatile one, that it shifted up very high within the past 2 weeks and then it dipped again this week. But we're not concerned about that. We know that we got in at a great price and it's a great company and it's a growth company.
Exactly. Yeah. Companies that are growing their earnings fast ultimately will return more to investors over long periods of time, as long as that growth is sustained. And that's very key. A lot of investors jump into so many companies that are growing fast. It's very easily seen that they're quickly expanding, but not all of that growth makes it into our pockets as shareholders. And that's the problem. So that's why we avoided a lot of stocks that have come down in recent weeks, especially a lot of big tech names that have come down, right?
Yes, like Meta. So as informed investors, we definitely want to keep monitoring situations and making any adjustments in our portfolio that need to be made. That's typical. And one more thing I wanted to bring up is, even though the entire stock market is on sale, Alex, did we go crazy? Is it the same as like Target going on clearance? Did we fill up the cart and go crazy?
Not really. We didn't really go crazy. We more or less kept the same pace of our regular investing. And that's because what we found really as investors is that consistency matters the most. It matters more than anything. As long as you're regularly investing and you're choosing good assets to invest in, that seems to do the trick. It's not so much this fear of missing out. I feel like, at least I used to feel this way. I don't know if you've
Hmm.
ever felt this way,
Yes.
where, oh my gosh, this stock is on sale, this stock is on sale. I want them all. And you only have so many dollars to invest in any given opportunity. So it's kind of like you have to make your choices. And so we just decided, okay, from the individual stock perspective, we're only going to focus on Etsy right now. Not to say that Meta isn't also a good buy, which I do think it is. I just think, and we think that Etsy has higher growth prospects overall than Meta or many other stocks. So that's how we feel. Just focus on the great opportunities and put your dollars toward that. And then also, we have our other investing where we're just buying index funds in the market like we usually do.
Yes.
When we made this purchase of Etsy, what kinds of things were we thinking about that could help investors out there deciding what to do with their own portfolio during times when stock markets are lower than typical?
Yeah, so not every stock dropped equally or proportionally. So if a stock was really, really overvalued, even though the market dropped, it may just be at a fair price, not a great price. So we don't necessarily want to jump the gun and buy a ton of shares.
Exactly. For example, a lot of the big tech companies, they came down a lot in recent weeks, but they didn't come down so much that it was like clearly a screaming deal by many standards, like a price to earnings ratio or a price to earnings to growth ratio. They just came down, a decent amount.
Yes. However, when we are talking about high growth companies, having them come down to a fair market valuation could still be a good deal because they're growing quickly.
Exactly. Yeah. And that brings us to quality. Quality of earnings is really important. When stock recessions happen or stock corrections happen, they tend to affect stocks unequally, like you said, honey. So a lot of the more stable, older companies, bigger companies, they tend to not go down quite as much because there's more of a consistency of profits. Investors are expecting those companies to bounce back economically.
Yes.
But with younger companies, there's higher risk inherent just in their size. They're younger, they haven't proven themselves yet, so they're more volatile.
Yes, and remember, the stock market is a self cleansing mechanism. So these are times when the ones that aren't making it get wiped away.
Exactly. Yeah. So focus on quality and focus on growth, right?
Yes.
If you can find both quality and growth, valuation should take care of itself over a long period of time. And you can count on that long period of time more because of the quality aspect.
Yes. And remember, this is value investing we're talking about. So you should definitely be thinking about buying into these positions and staying in them for a long, long time.
So, really, what we've been talking about today kind of comes down to this one mental model. And if you've been with the show for a while, you know that there is a mental model episode already recorded on this subject, and it is the subject of opportunity costs. So, honey, what is opportunity cost?
So, opportunity cost is choosing one option over another, and there's a cost to it. So, no matter what opportunity you choose, there's going to be a cost.
Right. In life, there's a trade off for literally every decision. Investing is no exception to that. So we have all these different companies that we're thinking about investing in. We must accept the fact that our dollars can only go to one at a time.
Yes.
So focus on quality, focus on growth, and of course, valuation is also very important.
Yes, yes, and I would say do not give into the FOMO, guys. If you missed out during this correction, it's okay. There's going to be another one at some point in time.
Right. There's always going to be more opportunities in the stock market. So if you felt like, oh, I didn't get that deal that I really wanted to get, you'll get another opportunity. Don't worry. And there's always going to be shares of companies that go super high and create a lot of wealth for people that we never get a chance to invest in. And you know what? That's okay, right?
Yeah, that's okay. We choose the best opportunities. There are many, many times where we have our list, we have our prices, and it takes a long time for us to actually strike. And many times we don't strike at all because the stock for some reason or another never came to our price. We never felt comfortable with the valuation, and we're okay with that. We're value investors. We're not here to make a quick buck. We're in it for the long haul to build wealth.
Exactly. So invest consistently. Don't worry too much about missing opportunities. And when you're comparing companies one against another, focus on quality, growth, and valuation and pick the best opportunity for you. So thank you so much for sharing your time with us today and just discussing with us a little bit about the current state of the market and how we as investors can think about this prospect of choosing between investments at a time when stocks are down and even rebounding a little bit.
That's right. We're so glad you joined us. Now let's go shopping.
Let's go shopping. We're actually about to go shopping, not in the stock market because it's closed today.
It's
But
Saturday.
yeah, we're going to go shopping though, for real, for real. All right. Bye.
Bye, guys.